The UK's 5 largest banks are too powerful and should be forced to give up significant numbers of branches, Labour leader Ed Miliband has said. He argued financial services have been an incredibly poor servant of the real economy for decades and should be serving the needs of small business. A Labour government would turn the tide by creating 2 challenger banks to boost high street competition. But the Conservatives said Labour's policies were all over the place. The big 5 banks, HSBC, Barclays, RBS, Santander and Lloyds banking group, account for the majority of bank customers and lending. In his speech at the University of London, Mr. Miliband likened the broken banking system to the energy market, claiming too much power is concentrated in too few hands and this has had a detrimental effect on enterprise and jobs. A Labour government, he said, would instruct the Competition and the Markets Authority to report within 6 months of the May 2015 general election what the limit on a bank's market share should be and the timetable for any sell-off of branches, which should be completed by 2020. Reckoning. He said, of course, financial services are an important industry in itself, but for an industry that is supposed to be a service, it has been an incredibly poor servant of the real economy. Not just since 2010, or 2008, but for decades in this country. We need a reckoning with our banks, not for retribution, but for reform to tackle the cost of living crisis in our country. Mr. Miliband added, if we carry on as we are, we will end up stuck with the same old banks dominating our high street, the old economy. Exactly what kind of bank is he trying to create? Vince Cable, business secretary. In America, by law, they have a test so that no bank can become so big and powerful that it dominates the market. I want to talk about the same principle here. And establish for the first time a threshold for the market share any one bank can have of personal accounts and small business lending. Labour would also introduce a new national credit register for small and medium-sized businesses, to increase competition and improve lending to small business by allowing all banks access to comprehensive data on their credit histories. Bank of England Governor Mark Carney said earlier this week that he supported the view that a cap on banks' market share would not result in substantial improvement to competition. Labour's recession, he told the Commons Treasury Committee, just breaking up an institution doesn't necessarily create or enable a more intensive competitive structure. But Mr. Miliband insisted, I am not talking about whether we should have new banks but about how we make it happen. It is not about creating new banks that control some tiny proportion of the market, but new banks that have a substantial proportion and can properly challenge existing banks. And we are not asking whether existing banks might have to divest themselves of a significant number of branches. We are asking how we make it happen. Shadow Business Secretary Chukwuna Munna acknowledged that Labour's plans could cause share prices of banks, including RBS and Lloyds, which are part government-owned, to fall. I'm not denying in the short term that you may see a hit on the share price of these banks. It's probably happening as we speak now, he said on BBC Radio 4's Today. But the reason we're doing this is so that we can grow our small businesses, which not only create in and of themselves more middle-income jobs, so we actually get people earning more, but also they're very important feeders in the supply chain for our larger businesses. Asked about Mr. Carney's remarks, he said the bank governor should not be dragged into political matters and suggested he had only expressed his view after being asked a leading question by a Conservative MP. Labour mess. For the Conservatives, Treasury Minister Sajid Javid said Labour had caused many of problems with the banking system and Ed Miliband was complaining that his own mess isn't being cleaned up fast enough. The CBI said there were already too many proposals for structural change. Let's have more competition on the high street, but a fixed number of bank branches per bank would lead to less consumer choice and service, its Director General John Cradlin told the BBC. Lib Dem Business Secretary Vince Cable said he agreed more competition was needed, but many of the things Labour wanted have actually happened. The British Bankers Association said competition was as much about the range of products on offer as the number of banks on the high street. But it said reducing the capital requirements for new banks would make it easier for them to get off the ground. Efforts by the Lloyds banking group to dispose of more than 630 branches last year foundered after Co-op pulled out of a deal due to financial problems, but the firm has relaunched the TSB Retail Bank, with about 600 branches, while RBS has set out plans to revive Williams & Glyn's, which ceased trading in 1985 to take over RBS branches in England and Wales and NatWest outlets in Scotland.